guys, welcome to our channel. Are you thinking of investment? If yes, then I could say these word investment could rose plenty of things, or I could say plenty of options or confusions to invest, like whether one should invest in shares, commodities, fixed deposits, debentures, mutual funds, SIPs, and all other possible options. It is very obvious because if I invest something, then I should get a good return because that good return means a very good financial profile. But whenever we think about investing in any company, many questions may come into our mind, like how I can get the information about the company, when to invest, where to invest, how to read the financial statements, how much financially viable the company is. Now, if we see when to invest and where to invest is a very subjective matter of individual's personal decision. Now question comes as to know about the company. For that many options are available like public media, its website, print media, its financial statements and all other possible medium which are available in plenty. Apart from this, it is equally important to read the financial statements of the company. Now the question rises from where we can get those financial statements. So these financial statements are easily available at company's website, NSE's website, BSE's website. Now let us see how to read the financial statements of any company. But before proceeding ahead, kindly note that we are here just to share our knowledge. We are not in the process of promoting any company or company's share. Now, today we had selected HDFC Bank. Due to pandemic of COVID, digital payments has risen in a drastic way. So it has driven the working of bank. So HDFC Bank. But why HDFC Bank? In the year 1991, when economic reforms have taken place, it was the first bank which has received the in principle approval of bank. If we look at the current scenario, HDFC has the widest coverage in Bank Nifty, that is 27.41%, followed by ICICI Bank. Now, about HDFC Bank. It was incorporated in India in the year 1994. HDFC, that is Housing Development Finance Corporation, was first financial institution in India to receive in principle approval from RBI to set up a bank in private sector. That was in line with liberalization policy of RBI of Indian banking industry in the year 1994. Now let us have a look at history of the bank. HDFC is incorporated in August 1994 as a subsidiary of Housing Development Finance Corporation. The shares of the bank was been listed on the platform of NSE and BSE in May 1995. Its share was listed at a price of approx 40 per share. That was a very good amount in the year 1995. In the year 2000, HDFC Bank merged with Times Bank in February 2000. That was the first merger of two private banks in the history of India. In the year 2008, HDFC has acquired Central Bank of Punjab. In the year 2021, bank has acquired 9.99% stake of Fairbairn. If we see the shareholding pattern of HDFC Bank, then we can have a look at promoter is holding 25.97% of shares, FFI 39.79%, DII 21.23%, and public like you and me are holding 13.02%. Now, it is equally important to know the company in which we are going to invest works in which business segments. So HDFC is working in major three business segments, that is wholesale banking, treasury and retail banking. Wholesale banking, it serves to large corporates including MNCs, body corporates, uh, bank business banking, infrastructure groups, government bodies, and what kind of products and services they are offering. They are offering services of working capital facility, term lending, project finance, debt capital market, mergers and acquisitions, trade credit, supply chain financing, forex and derivatives, cash management service, wholesale deposits, letter of credits and guarantees, custodial services, correspondent banking, treasury. Products and services which they are offering are foreign exchange and derivatives, solution and hedging strategies, trade solutions, domestic and cross borders, bullion, debt capital market, equities, research reports and commentary on markets and currencies, assets liability management, and statutory reserve. If we see retail banking, then they are serving to individual borrowers, salaried and professional borrowers, micro and small sized business, extremely small businesses like kirana stores, self help groups, and non residents. Products and services they are offering are auto loans, credit and debit cards, personal loans, home loans, gold loan, mortgages, commercial vehicle finance, retail banking business, savings and current account, fixed and recurring deposits, corporate salary account, construction equipment finance, agri and tractor loans, SHG loans, Kisan Gold Card, healthcare finance, distribution of mutual funds, life, general and health insurance, offshore loans to NRIs, NRI deposits, small ticket working capital loans, business loans, two wheelers loan, loan against security. If we look at the turnover of the bank, that is that too on segmental basis, see, in the year 1819 it was 23,57,648. It has increased to 26 lakh. Further in the year 2020-21, it has increased to 32 lakh 33,000. In case of retail banking also, we are seeing the upward graph. In wholesale banking also, we are seeing the upward graph from the year 2018 to 2021. In other banking operations also, we are seeing a very good upward graph. If we see the operating revenues of the company in the year 2020-21, interest income, which is the major income proportion of any bank or non-financial institution, it is 78.47%. In the year 2019-20, it was 79.95%, and in the year 2018-19, it is 78.35%. Income on investment, they are increasing. Interest on balances with RBI and other interbank funds, it is also increasing. So revenue wise, the performance of bank is very good. But if we see the interest income in the year 2019-2020, it was like 79.95%. That is almost 80% of total income. Total operating income was interest income. In the year 2020-21, interest income is 78.47% out of total income. That is a minor difference, a minor slide down has been observed in the 2020-21. If we see the profitability of the bank, then profit before taxes is 32 lakh 19,964 in the year 2018-19, which has increased to 36 lakh 60,760 to in the year 2019-2020. In the year 2020-21, it has increased to 41 lakh 65,899. Profit after tax is 31 lakh 11,653. So, in terms of profitability also, the graph of the bank is showing a upward position. If we see the provisions and contingencies, the provisions are 7,55,008 in the year 1819, 12,14,239 in the year 1920, and in the year 2021, it is 15,70,285. Now, let us have a look on analytical ratios. If we see the capital adequacy ratio, it was 17.1% in the year 2019, which has increased to 18.5% in 2020, and which has gone up to 18.80% in 2021. In case of EPS also, it was 39.30 in 2019, which has increased to 48 in 2020, and which has gone up to 56.60 in 2021. In case of diluted EPS also, in the year 2019, it was 39, which has increased to 47.70 in 2020, and which has gone up to 56.30. If we have a look on NPA ratios, we can observe here is in case of gross NPAs, in the year 2019, it was 11,22,416, which has gone up to 12,64,997, and which has gone up to 15,08,600 in the year 2021. In case of net NPAs, 3,21,452, it was in 2019, which has gone up to 3,54,236 in the year 2020, and which has gone up to 4,55,482 in 2021. Percentage of gross NPAs to gross advances were 1.36% in 2019, which has reduced to 1.26% in 2020, but it increased to 1.62% in 2021. Percentage of net NPAs to net advances, it was 0.39% in the year 2019, which has decreased to 0.36% in 2020, but which has gone up to 0.40% in 2021. If we see return on assets, it was 1.90% in 2019, which has increased to 2.01% in 2020, but it reduced to 1.97% in 2021. If we see the contingent liabilities, it was recorded as 0 in 2021, which was 11,28,953 in the year 2020, and it was 10,24,715 in 2019. If we see the CASA ratio, it was 42.20% in 2020, which has increased to 46.10% in 2021. Now, let us have a look on shareholders fund. If we see the total shareholders fund, it has increased to 2 crore 3,72,281, which was 1 crore 70,98,602 in 2019, and 1 crore 49,20,632 in 1819. In liabilities, specifically there are three heads: deposits, borrowings, other liabilities, and provisions. Right? It is also increasing. Here deposit means जैसे आप और मैं like laymen which are depositing their amount in any bank, right? These are those deposits, so they were also increasing. That it shows that the creditability of bank is good. Now let us have a look on assets. Assets में क्या है? In assets, majorly we are finding here are cash and bank balances with reserve banks, balances with bank and money at call and short notices, investments, advances, fixed assets, and other assets. If we see fixed assets, first of all, they are in increasing trend. That is a good sign. If we see investments, they are also an increasing trend. That is also a good sign. Overall, the total assets of the bank are increasing. So, in this way, we used to analyze the balance sheet. If you like our video, please like, share, and subscribe our channel. Thank you so much for listening to us.